Alright, here we go again. Welcome back. This is Franz, thetrendtrader.com. Let's take a look at what major markets are doing in regard to trends. Are we able to follow anything? Now, what you see on the screen right now is the S&P. You should be well able to notice the ongoing uptrend, and even though we have bounced, as you can see right there, here, we have bounced into the balance zone. We are at the red line even, bouncing back, and the market closing relatively high in regard to the week's open at this level here, and we're closing above the balance zone. And as long as the price is staying above the balance zone, as long as we don't hit any fractal inside the balance zone, we are really staying long. We are holding on to the position as long as the trend is going. The current stop is right above the breakouts. Now, when we take a look, we have a breakout in this area. We have another breakout here and another one there. Market hitting fractals, major resistance areas that are taken. The market just continues on. That's what a trend really is. You get a lot of people shorting into that stuff. When you read financial media, social media on this stuff, you have so many people trying to short into a trend like that. What we do is we just add on as the trend continues. We enter the trend right here where you have the initial breakout, and we continue to add on as the market keeps breaking out into the trend direction. And as you know from my previous weekly recaps, the trend direction is easily defined by the overall time frame. The S&P at this point has not hit a fractal inside the balance zone. The balance zone again is just these three moving averages here, and this is where the market is looking for some breath. That's where it's got to go when it's correcting, and right now we don't have any sign for the S&P here on the screen to assume that it's correcting. Therefore, we're staying long. We're waiting for a new fractal inside that balance zone. It will most likely be created at that point, at the low of this week, as it closes so high, so strong, and continue higher. Now, we have no clue if this is the last breath that the bulls are making here, or if this keeps on going. We just don't know. We just hold on to the longs and let us stop out when the market tells us to stop out, and that's really it. The same is true for the Japanese Nikkei index. Very unthankful development in this market. Let me remove previous drawings here. As you can see, we have a breakout taken. That's the fractal being formed. It's hit here. That's where we buy. We are long. We have no fractal that's hit here inside the balance zone. Instead, the market gives us a fractal inside the balance zone, a little bit below the balance zone even at that point, going higher, taking the next breakout here, two fractals at that point, and now we're inside the balance zone. I don't want to call this week a rejection of the blue line, the bottom border of the balance zone, but at least we're bouncing a little bit to the upside, possible continuation of the uptrend. We don't know. What's for sure is that the overall uptrend on that monthly chart, if we just take a quick look here, is still ongoing. The uptrend here on the overall time frame is ongoing. Price is staying above the moving averages, and that means we are in buying pressure. So we always see the market coming back to levels where we have people coming in buying. And in the Nikkei case, of course, we see the Central Bank of Japan probably getting in, trying to enforce their interest, if you want. But we don't really care about all that stuff. We just follow the price action. And the overall trend on the monthly is up. The weekly trend is also up, as we don't have a new fractal inside the balance zone yet. Most likely it will be created here, and that's where we pull our stop. Right now the stop is below the crossing of the shorter term moving averages here, the green and the red line. That's a in my opinion, a good place for a stop in a trend following approach, as this market is correcting, and we'll see if it is able to build up some momentum. When you look at the momentum down here, you can see that we are really looking at decreasing momentum over the last couple of weeks, even months, and probably we'll see a continuation, an increase again, or a continuous correction. And that's exactly why I'm always telling you, don't risk too much on your trades. Now you have no idea, as these breakouts are taken that I just marked, if the market is going much higher or if it's gonna just, move sideways or hit you very, very much in the opposite direction of your trade. Therefore, a minimal risk is appropriate. Only when you see the market continuing into your direction, you want to go in a little bit bigger and follow the trend with more risk. But that is only the case if you're really sure about it. When you take a look at the S&P index, we just took a look at that. The overall trend direction still up, indices all over the place. Even the German DAX index is not that bearish actually. We do have a stop out here in this area. The fractal was taken, but the market is not that weak actually. We're probably seeing an internal correction and making new highs soon. We don't know if we get a breakout fractal somewhere in this area here, or if we have to take the highest border of the trend, which is the actual new all-time high, and the market kind of doing something like that, continuing up, and then we would just follow the trend again, because we have no clue where this market is actually going. We're staying long in the indices even though momentum is decreasing, and we gotta pay attention to our stops, and these stops will be pulled up as soon as the market tells us to pull them up. We don't want to be too quick on it. Remember that if you look back into 2008, 2002, where the market really crashed, you always get your fractals inside the balance zone before the crash happens. You get multiple fractals before that happens. Therefore, a crash really is no surprise. You are out of your long way before that, and the market gives you the opportunity to enter short before it actually happens. Now that's the case for the indices still staying long. We do have updates in the forex markets, British pound, Australian, for example. I have marked the fractal right there. That's where we took a short. When you take a look, market is down overall. The overall time frame, the monthly chart, will support that as well. We are down, we are below the balance zone. We have a volume increasing a little bit in the downside direction. Momentum a little bit weaker, but I'm guessing, and that was the overall and the general goal in the first place, that we are hitting these lows right there at the 145 area. The way the market is performing until it hits that low, if it goes into such a major correction like it did here, or if it just at this point here continues down more or less continuously, we don't know, and therefore we have a trading system, and that system will take care of all the eventualities, and therefore we follow the system with the appropriate risk management. We're short in the British pound Australian at that point. British pound US dollar, we don't see too much upside momentum here. We do get failed breakouts. The marked black line shows us a failed breakout to the upside. That's because the overall trend on the monthly chart is not up. We're just trading into the balance zone, as you can see here. We're still down actually, so we are looking for new sell signals in that pair. British pound yen already gave us a new sell signal. You just take a look at the fractal breakout at this level here. We will take the market short. We have a trend going on, a huge trend actually to the downside, simple correction, and now continuation to the downside. No major divergence here, just an internal divergence. If you don't know what that means, you check out my trend following approach explained video. we are looking at new lows most likely here in the coming months, maybe until the end of the year. You gotta have your patience if you trade these high time frames for big pips. Now, what we really want to do is we don't want to just make a living from all of this. We really want to change our lifestyle trading, and therefore we have more patience than the usual market participant who is just jumping around in between day trades and maybe holding stuff for 2 or 3 days. We are holding stuff for months, and in these months the market is really moving in our way when we have a nice trend, and when we add on, like we can see in the S&P, for example, and we've already cashed in, or how do you say in English, cashed out on the British pound Australian short, and now we get a chance to enter that market again. You don't want to get caught up into short-time trades. You want to really build up positions and take the big gains, not just small crumbs of it. When you take a look at US dollar yen, you have another sell signal right there. There's a fractal here and another one right there. There's a possibility for this to go down. However, remember, we are not judging. We don't really care. Maybe it goes down, maybe it hits these signals, gives us sort of a hammer or divergent bar or whatever you call it, and then the market continues up. If there is a new fractal or this one is hit first, we'll just take it long. And we really follow that market wherever it goes. We don't have a real opinion on this. We don't have an opinion on this at all. We just follow wherever it goes. US dollar yen currently short position in place here, but we would also take it long if it happens. Euro yen. On TradingView a couple of weeks ago, I was already blamed for buying Euro yen and arguing for a uptrend in the Euro yen, but look at what happened here. We have a breakout being taken, another breakout being taken, and look at this. We probably have another one being taken here. We have a strong week closing, and I see this coming up quite a bit. Let's be happy about people who doubt our approach, because it simply says that we are acting against market thinking. People thinking about the market are people who are interpreting the market, and they are always on the wrong side because they're not following price. They interpret price, and when you interpret price, you're always on the wrong side. You gotta develop that confidence in just following the market and accepting what it's presenting to you. It's only then that you are flexible enough to change your view and to change your position as a consequence of that, because you are open to market movement, because you cannot be right all the time. It's impossible. Nobody knows where the market is going. I mean, imagine that there are people who don't even know that a big crash is coming, or the major people, the people you see on the financial media, Warren Buffett or whatever you call them, they don't know when the big bull market ends or when it starts or how long it goes. There is nobody in the entire world who does that. And it's very important to realize, in my opinion, that you, as you are there studying and working with the market, are just as smart as everybody else. In today's time of age, this modern world that we live in, we have so many possibilities to get information, and we just have the same information as the big guys have. And in this regard, we are just as smart as they are, because we know, or we can know if we want to know, that there really is no room for interpretation. All we have is the candles on the chart and the signals that our trading system takes. And we here discuss a trend following approach. You might have a very different approach, doesn't really matter. But what matters is that you always follow that approach. And the euro yen on the overall time frame right there here shows us the breakout on the overall time frame into the upwards direction. Now you can get 1,000 people who tell you that you are wrong. This should only support your opinion. If they tell you that you are wrong, you're probably right, because the market is going to gain speed from them being stopped out, and then them being the guys who buy into the ongoing trend when you have been buying months ago. And so actually I am enjoying people who disregard what I say, because I know on the longer time frame, on the really long-term approach that I'm taking, they are always on the wrong side. And we do get stopped out a lot of times, and we're going to look at some examples of that in a little bit. But when the trend is working, the more people you have that are telling you that you are wrong, and the euro yen is one example of that. We can also look at the euro Swiss franc, and that will show us just the same picture. What we get on the overall time frame here is a breakout, a simple breakout. Oh my God, what was that? Simple breakout here above the fractals being taken in the balance zone. When we go into the weekly chart, we have a huge breakout above this black line marked, and now a second one is coming up here. And I don't have any reason to doubt this to go on. It broke out already. It has momentum, as you can see. Why would it not continue? It has just started to move on the higher time frame. Let me show you this again, the monthly chart here. Look at that. We're not even far away from the balance zone. So before this really can start to correct much, it would actually have to move up very steep and then come down. There are multiple scenarios, of course. It could also move something like that. It could also be more unthankful and could do something like that. We don't know. That's why we trade with appropriate risk management. But what we definitely recognize, and that's all that's important, is this breakout here on the higher time frame into the upwards direction. And that's what we want to trade on the lower time frame, which is the weekly. You can do this on the daily, you can do it on a 4-hour, whatever you like. The point is you trade into the overall trend direction. Let's take a look at some pairs where we lost. New Zealand dollar, US dollar. The overall time frame, let's not pay attention to anything I wrote here a couple of weeks ago. The overall direction here, as you can see, the price hit the breakout at that level, but ever since that it was down. If we trade that, and we definitely did trade that because we did have that breakout on the higher time frame, we were actually buying that market somewhere here. At that fractal, you could also buy it right there at the breakout. It was hit, but then the market retraced. You have your divergent bar in here. It looks like this bar is rejecting the balance zone. I put the stop here because the overall time frame is not so clear yet. And I got stopped out. I lost, I think like 0.6% on this, as the initial risk is 0.8, 0.7, 0.9. Always depends on what kind of size you can get a risk. And it doesn't matter if this market works or not. This one didn't. We take a loss, and we take losses like this all the time on many markets, that we think a breakout happens, but then it doesn't. It doesn't really matter. The big trend, as we have seen, as I've mentioned, is happening in a couple of markets, and that's where we make the money. We have 2, 3, 4 markets in a year that make us the money, but we enter like 50 markets a year where we think that the trend could get going. And even in this New Zealand US dollar, we don't know if the market comes up here. It may take that signal, it may take that trend, it will make that trend, and we may have gotten stopped out on the first try, but a second try might do it. Sometimes the third try does it. You gotta have your patience, you gotta follow the market, you gotta be able to accept that you just don't know. And in this case, we got stopped out. The loss is minimal because of our risk management. You can also lose much on this if you don't pay attention, if you just put on some position. Same as the New Zealand US dollar is the New Zealand yen. We have a breakout being taken here at that point. Actually, it was formed right there. It hit it. We got long just as it went above that fractal mark here. And what has the market done ever since that? It dropped down. It went into the balance zone. The overall situation, if you take a look at the monthly chart, the overall situation is a breakout there. We are now retracing back into the balance zone. We don't want to wait too long around these areas. We don't want to stay into the trend. As it hits the low of that candle here, it drops back into the balance zone. That's where the market goes if it wants to correct, if it does not want to go into a trend. So we put the stop there, and as you can see, we're stopped out this week. We lose again. We lose below 1% because we have a risk management plan. New Zealand yen, that was another loss at that point. If we take a look at the Australian dollar compared to the New Zealand US dollar, here it's a little bit different. The market is working. We have the market staying above these breakouts, even above that major breakout there. We have corrected into it, we rejected the area, and we are assuming a movement to the upside. There's another breakout right there. You could buy that again. Taking a look at the higher time frame, the monthly chart, it will support our internal, so to speak, scenario. We have fractals in that area. Market is taking them and not retracing too much in comparison or in contrast to the New Zealand US dollar. Market's just going up, so we hold these positions. For the last market for the day, what we have is the gold market, and over here we have a long breakout. Again, this market has been in an uptrend. It's correcting, made a initial move above the balance zone, meaning it goes from below the balance zone to above it, makes a fractal here. It doesn't make a new low below here. So now we are waiting for a breakout to the upside. To really see it going on, you can look at the weekly chart, and the weekly chart gives you these breakouts, and they were actually taken, and we are now trading at a loss. The stop is below that candle, right below that candle actually, right below this balance zone where the moving averages are intertwining, and we are long here. We're going into the weekend with a loss here as well, but we have faith in this position, as technically the market really wants to move that way, and technically on the higher time frame we don't see the market rejecting the breakout level. We don't see the market making a new low here. Therefore we hold on to our longs. It doesn't matter at all if you think that this doesn't make any sense in correlation to the indices or the stock markets in particular. You just trade the signals, and by risking the appropriate amounts, which means never ever more than 1 or 2% depending on what you're comfortable with, you will end up a winner after a longer period of time. And that's what's important in trend following and the approach that we are looking at thetrentrader.com, that you understand this is not for getting rich quick, and there is no way to get rich quick. The only thing that you can do is accumulate your profits and minimize your risks, and that's exactly what we're doing. And we're doing it at the high or on the high time frames, as we also have a life going on, and we don't want to spend all of our days in front of the screen. And that's important as well to understand. Of course you can collect the crumbs, and of course you can trade 5 and 15-minute charts, but what kind of life do you lead, and do you really make the money that you expected to make trading trends? And that's, or not trading trends, but just trading, and we really want to make a difference in our fortune, and we don't just want to make a living. And that's really what's important here, for me at least, in my approach. And remember, you're just watching my videos and what I am saying, and of course that's not the entire truth. And I think that in trading, everybody or anybody has their own truth. And in this regard, I guess I want to finish off the video by saying you've just watched again my approach to the markets and my thinking behind the markets. And if it makes fundamental sense to you or not doesn't really matter, because that's not my approach. And therefore I'm just quitting positions that don't work, and I'm holding on to positions that do work. And I don't think that anybody has the competence or the knowledge or the skill to judge whether a commodity position in gold will be more probable to work out compared to an indice position in the S&P or the Nikkei or the DAX or whatever. not working out. So that's just arrogance, in my opinion, and therefore basing every decision that you make on technical aspects, in my opinion, again, is the most essential thing that you can do, or not thing, but the most essential prerequisite that you can have in your trading in order to grow your account over the next decades. Now, what does it help you if you can grow your account over the next year or 2 years? Now, if your strategy fails after 3 years, what have you really gained 20 years down the road? Now, that's just pointless. You could just play the lottery and win 500 bucks here and there. uh, I don't know. That's not for me. What I want is a reliable and stable way of approaching financial markets and being able to convert my interest and my motivation into money. And I can only do that if I really have an approach that I can repeat all the time, again and again, exactly in the same way. It doesn't even take thinking. We're not analyzing markets in the usual sense of the being. Now, if you go to all these financial websites, they analyze markets for you, but that's not what I'm doing. We're just following markets. There are many people on Twitter as well who do the same thing, and they do it in stocks, and they do it in commodities and forex and whatever, bonds. The point, the main point, the basic point is follow the price. The higher the time frame, the more reliable your signal, and the more probably your gain. However, it doesn't mean that you're not gonna lose. You're gonna lose for sure. So you want to have risk management in place. Anyhow, altogether, finishing off the video, again, just my opinion, just what I'm thinking, following trends, following price on a long-term approach, as as we're growing money over decades, and we really want to make a difference in the account, and we don't just want to collect crumbs, and that's the point. It's over time, or when you look at the individual day that you're spending. Now, this takes a lot of patience. It's a lot of pain, actually, much more pain than if you're a day trader and you know at the end of the day what you have or what you don't have, and you can make up for it or you can't at the end of the next day. We don't have that. We just gotta have that patience and wait it out for weeks and months and years. But that's what it takes if you want to make it big. Otherwise, in my opinion at least, you're just collecting crumbs, which is not a bad thing. It just depends on what you want. Hopefully you enjoyed the video this week. Got quite long. Maybe you're there again in a couple of weeks when you'll have the next trend following update on the major markets. See you soon and enjoy your time.